Oil prices continue to climb following the decision by the world's top producers of the commodity to significantly reduce their output. The international benchmark Brent is trading above $94 a barrel after being below $90 all of last week. Now, led by Saudi Arabia and Russia, the OPEC Plus cartel said they're slashing their production by 2 million barrels a day in November. That's the biggest cut since the height of the COVID-19 pandemic. And it comes despite pleas by big consuming nations, led by the U.S., for the group to continue increasing the amount of fuel that they pump out of the ground. Now let's hear from Washington's top diplomat, Antony Blinken.
I think as you've heard clearly from my colleagues in the White House and the administration, we see the decision as both disappointing and short-sighted, especially as we have a global economy that is dealing with the implications of recovering from COVID, as well as the aggression from Russia and Ukraine and the consequences that having. We've said all along that supply needs to meet demand, and we've been clear about that, and we've been working on that.
Now, for more on this story, let's go to Craig Erlam, Senior Market Analyst at OANDA in London. Welcome back to the program. Craig, now, can you just give us a sense on how much further this rally can go? Because oil has been higher since the start of the year, but it's also been much lower.
It has. It's been extremely volatile. There was a time when oil was trading above $130 a barrel. We're a far cry from that at this point in time. But there's so many different factors driving the oil price at the moment. You've just alluded to some. War in Ukraine is a major factor. The role of the OPEC Plus alliance is a major factor, but also the state of the global economy. For the last 12 months, what's driven oil prices so high has been the fact that the global economy has recovered so fast from the pandemic that suppliers struggle to keep up. Now we're starting to see the other dynamic. The global economy is starting to slow. Recessions are being priced in this year. And now the price action becomes far more two-way because we've now got the OPEC Plus alliance cutting production. So it's very difficult to say where we're ultimately going to end up because of all those factors that are at play here. But what's important is the global economy is slowing, and that is likely to create that little bit more balance in the markets, which is what OPEC Plus has sought to address.
Right, so you talk about the many factors affecting the price of oil, but is there more detailed data that maybe OPEC Plus is seeing that we in the public have not been able to take into account? Are they seeing a perhaps deeper recession, and that's why they're cutting oil by so much?
Yeah, that's a great question, and it's a question that many people are asking right now. And you heard the comments there from Antony Blinken in the US, and there's clearly a lot of confusion as to why this alliance that has failed to meet output targets for the entirety this year means that many people across the world have been paying record prices at the pump in order to fill their vehicles, are now going to see higher price again because of a 10% rally in oil prices steadily over the course of this week. The one thing we can say is that at the last meeting, OPEC Plus continued to anticipate higher demand growth. And that is while other agencies around the world were forecasting lower global growth and potentially recession. So their forecasts were very much at odds. So it is possible that their forecasts have now moved more in line with the global consensus. And actually, the global consensus has declined since the meeting last month, particularly in certain countries like here in the UK. So it is possible that they are just forecasting lower global growth than they were anticipating last month. The other factor we have to remember is they're not meeting every month, so their next meeting is in December. So it may seem like they've moved prematurely, but it may actually just simply be the case that they are moving because they don't want to wait till December to adjust their output levels. So what seems premature now may seem more realistic in a month's time. It's very difficult to say. Like I said, it's a rapidly moving environment, and therefore these moves are going to come under severe scrutiny, but it's also very difficult to predict.
All right, Craig Erlam at OANDA in London. Thank you for joining the program.
Thank you.